Good afternoon. This is Danny Haines-Edwards with Weichert. This is Profile of Real Estate Agent. Today I'm going to have a special guest. His name is going to be Bill Nixon, and I'll introduce him later. But right now we're going to, continue getting to know me. Um, so today I would like to talk about my family. I have a great family. I love my family. I've got two beautiful young adult children in their 20s. One, she lives down in Florida and she is engaged. And then my son, he lives in New Jersey because I live in Pennsylvania, and he works for Suburban. Um, my daughter, she met her fiance down in Florida, her second year of college. She was at FAU. Her name is Kira, and she met Bobby on a date, Tinder, and cringe at that. But um, he turned out to be a great guy. He's such a great guy, and he so loves my daughter. So we're all very happy and excited for the two of them. My son, oh, he's so smart. He, Want to know how smart my son is? He decided to go to a 2-year college, and then once he got, you know, through I guess 45 of the 2 years, he transferred over to Rutgers and graduated from Rutgers with as an environmental scientist. And before he even really left there, he got his master's. So I'm like, he's set, he's done, and he's just soaring with his work. He actually interned at Suburban. They absolutely loved him. They said, get your master's. He did it, and they hired him. So he's doing great there. He loves it there. He's doing so well. He's so smart. I don't think he even believes how smart he is. Oh, smart, smart. So I'm very proud of both of my children. Um, my mom, she's still alive. Unfortunately, she has dementia. But my sister's taking care of her. So, hopefully that continues on and everything. Um, I work as a realtor. I started, I got my license in 2004 when my children were just pretty much babies. And I kind of was given the idea that this was not the time for me. So I put in referral. Um, then I got a whole bunch of different jobs, and I worked at a staffing agency, and then they closed down the office. They closed down the office on December 7th, which is Pearl Harbor Day, which I kind of thought that's ironic. um, and then I had a couple of jobs, and then I was just like, what am I doing? I have this license, like I'm paying for it, like, not the full amount for the license, but part of it. So I might as well just start using it. So I went into an office, reinstated it, and I've been a realtor in New Jersey since then, still am, and now a couple of years back, I got my license in PA, so here I am in Pennsylvania, making it work. So enough about me. Let's get on to our special guest. My special guest is he's a mortgage advisor for Weichert Financial. His name is Bill Nixon, and he is the best. He's gotten so many people out of like the little oopsie daisies that they've gotten themselves into, with their clients, and smooth sailing. Like, he makes it very easy. He's able to tell you right from the beginning if it's going to work or not, if they need to kind of still work on their credit or whatever, because he just puts in the numbers and boom, boom, boom. He knows exactly what's going on. So let me introduce you to him, and let him start speaking for himself. So basically, Bill, what I'm going to ask you to do, if you could introduce yourself, contact information, and what offices you work out of, and how you can help people.
Okay, sounds good.
Okay.
Hello, everybody. My name is Bill Nixon with Weichert Financial Services. I started in June of 2016. Funny story how I got into the mortgage business. My wife and I bought a house back in 1996, and my brother-in-law had asked us if we if we were interested in doing a refinance, and he told us who to go talk to, and we went and met with him, my wife and I, and we were there for about an hour and a half, and I never did the refi. He actually handed me a new hire package, and I left.
Nice.
And I was selling cars at the time. I'd sold cars for 4 years at a GM dealer, and this was GMAC Mortgage, and they had their own mortgage division, and my wife was like, who are you? How did this happen? I'm like, I have no idea. So I did that for about a year. My dad passed away. That I basically stayed home for a little bit, took care of my son. My daughter was 3 months old at the time. My son was 5. My daughter was 9. And I had gotten back into it in 2003 again by accident. I was working at an industrial air compressor company, and all these guys kept going in and out of this office building, and they had these flashy cars. And I said, "What do you guys do?" He said, "I work for a mortgage company." I said, "Oh, that's cool. I used to." So we got to talking, and that was in 2003 during the refi boom. So met that guy and got that job and started working there. Did that from '03 all the way through the crash in '08. And it was so weird. Yeah, so we primarily did refis, so there was not a whole lot of purchases through that office. So when that came to an end, I'm like, "God, now what do I do?" And I had done a loan for a previous client who I saw him in the newspaper like a few days before. He became a policeman in Allentown. And not even a few days later, I get this phone call. I'm like, "Wait a second, it's this person's name," and I just saw his picture in the paper, and it has to be him. I'd never met him. I just did his purchase, but never met the person. And he asked me if I was still in it, and I said that I was. And I told him, I said, "Are you a policeman now?" And he said, "Yeah." I said, "I went to school for criminal justice." He said, "You should apply. You guys are retiring like crazy." So I did. Got hired by Allentown Police Department at 42, I think, at the time. Back in 2009, went through the police academy. Was a policeman for like 4 months, and saw everything and thought, this really isn't what I want to see every day. It wasn't scary, it was fun, but it was just kind of depressing. You see a lot more than what they tell you. So anyway, fast forward. After that, I went back into the car business, but I was a service writer at a Honda dealer for 5 years until the kids got out of school. Now, one of the guys that I used to work with at the dealership, I got him into the mortgage business. He started with Weichert about 15 years ago and kept bugging me. He's like, "You should work for Weichert." And I said, "Nah, it's not the right time." And then I met with one of his bosses, and then took the test, did all the things that.
And it became the right time?
Passed it, and
excellent.
It's bizarre. I don't know how to explain how these things happen, but.
It's okay. So why don't we start getting into some of the
Sure.
the nitty-gritty here?
Okay.
Who can get a mortgage?
Anybody over the age of 18.
Okay.
And you don't even have to be a U.S. citizen. You could be a permanent resident alien, U.S. citizen. As long as you're over 18 and your mortgage math works, you're good.
Perfect. Okay. And what documents is needed?
Typically we get, depending on the job, we'll get pay stubs, W-2s. If you're self-employed, we'll get tax returns with profit and loss statements, and any other supporting documentation to build the file. But it's pretty simple, just to get an idea of where the person stands financially.
Okay. I'm going to ask you a little bit different question on this one. What's the difference between a pre-qualification and a pre-approval?
Well, pre-qualification, you'll see the minimum amount of information is pulled. They don't really go deep into things. You get a lot of verbal things, like if I run a person's credit report, I'll see scores. I'll ask them how much they make, ask them how much they have in the bank, and then you can run facts and figures like that, and they'll say, "Okay, based on what you're telling me, you could be."
So it could be kind of a little skewed what the final product would be.
I don't like doing that.
Right, right. So
get all
then
the
a pre-approval, what's involved with a pre-approval?
I get W-2s, bank statements, pay stubs. I get verification of things. People, I ask them, "Do you have money? Do you have access to money?" And if they say yes, I ask them, "Well, where is it? Where are you getting it from?" And I get all that information up front, because I typically get the things that an underwriter is going to ask for. So I don't want any surprises. So I'll vet all that up front, make sure that it's correct. And the very few items come up that you don't know about. You know where you stand. So, and then you explain to people how the math works. A little bit different than buying a car. I always tell that to people: you can buy a car with a credit score. That's basically it, not with a mortgage. So.
Right. And how do I know what I can afford? Income, debt,
Well, when we run a credit report, we have a mechanism that allows us to do a soft pull, so there's no hit to the credit. We see everything that you normally would. It'll show all the amount the amounts that you owe on various things. It'll show the balances and it'll show the payments. The only thing that you have to take into account is student loans. If they're deferred and they show zero payment, then you have to ask them if they have paperwork that will allow it to state zero payment, or are they deferred for a certain amount of time. You have to assign a payment to that, and then depending on where they work and how long they've been there, it's a little bit of the investigative work, I guess you could call it. If you're salaried, that's the easiest. If you're an hourly person, you have to find out, how many hours do you work? Do you get overtime? Because a lot of people
What's
say,
the commonality on that?
"Oh yeah, well,
Like, let's say they can work anywhere between 35 to 42 hours. So you just kind of find what the common.
well, yeah. If they've been there long enough that if you're there 2 years or above, then they call it, and your hours vary from week to week, then it's called variable income. So you have to have a 2-year history of that. If you're salaried, you can come out of college and get a job and prove right away if your math works. I've had that happen too.
That's nice.
Yeah, it's a lot of fun. It's pretty cool. It's like financial math puzzles. Wish it was like that when I was a kid, because that math. I don't know.
And how does that debt kind of fall into this?
Well, typically, depending on the loan program, they call it a debt to income ratio. So once you know how much a person makes per month, that can be counted. Usually, you figure anywhere from 50% up to maybe 55%, sometimes a little lower, of the total amount that they make. So to make it, easy math, let's say there's a person who makes $5,000 a month. You'd cut that in half, and you have $2,500 to work with. So you look at the amounts that are on their credit report as far as monthly payments. You take that out. Whatever's left over can be the total mortgage payment. So that's the loan itself, the taxes, the homeowners, and possible mortgage insurance. And that's how you know. Then you kind of have to guess at what price range to look at, because taxes are different on all the properties. So.
Right.
But it's not difficult, but you definitely need to know those things.
Right. And what's the first time home buyers program?
Well, with conventional, minimum is 3% down. A lot of people think FHA is first time home buyer, but it's not. Anybody can do that. Minimum payment on that is 3.5%. And there are some down payment assistance programs. A first time home buyer is anybody that hasn't owned the property in the last 3 years. So it can be, as long as you're past that, then you're a first time home buyer again. So there are programs out there, PHFA, they allow for loans and assistance that you can get for down payment and closing. So.
Okay.
Yeah.
And how much money do I need?
Depending on the program, I typically tell people it's about, if you're going with the lowest down payment, you usually need about 10% of the sale price. That takes into account the down payment and all the closing costs. And I found that out by looking back at old files over the years and taking a look at sale price and what the total out of pocket was with those same parameters, and then it's usually 8.5%, 10%. So I always ask people, do you have this? And if they do, and we got something. We just have to look.
Right.
So.
Yeah, I thought the rule of thumb was like if you had 20,000, you could do pretty much anything.
Yeah.
So that means that people could have a little bit less and still buy?
It depends, sure. Yeah.
Okay, that's good to know.
Mm-hmm.
And what are the sources of funds that people can pull the money from?
Well, if they have their own funds, it just has to be in the bank for at least 2 months.
So like their savings account,
Sure.
401k,
401k can be used.
stocks.
As long as you can liquefy them. You have to look at the paperwork that's associated with those programs. So they call it terms and conditions. You can get gift funds. That's unlimited. I've had very low gifts come into play that were like the price of that.
Where they came from family or friends.
Yeah.
Okay.
And that just has to be, as long as you can source everything. So if somebody has cash that they put into the bank and it's recent and they see that, it's not that it's a bad thing, you just can't count it. So
you have to kind of wait 2 months or something.
You would, yeah, but a lot of people don't know. Nobody lives their life based on that, on mortgage math.
Right. Yeah, because I actually ran into that, and we had to just like kind of let it sit for I think another couple of weeks, and then it was like 2 months, and then we were just like, oh yeah,
right.
We see how much you got in your bank account. We're okay with that.
Right.
But 2 weeks ago we were not.
Right. Yeah. And I've had people sell cars, sell musical instruments, as long as you can prove.
Where the funds came from, and that it wasn't something bad.
Yeah.
Where can I get money if I don't have enough? Oh, well, you kind of answered that, like the gift money.
Sure. And the down payment. And it's the grant money's always out there. It just, Depends on, how fast you can get it done. Doesn't
Right.
take too long, but it's
If they still have the funds available, or
that some of the programs are like that. Yeah.
okay. Are there what are the different loan programs? There's conventional, FHA. There any other ones?
Yep. There's VA, that's veterans.
Okay.
You also have, there's what they call non-QM, where it might be somebody that doesn't fall into your normal guidelines. So let's say you have somebody that's self-employed that doesn't show a lot on their income tax returns. Well, you can use their bank statements. So they'll allow you to take either 12 months or 24 months of bank statements, look at all the deposits, and then they average it out and say, this is what your income can be, even though it's not on your tax return. So it really just depends. You have to take everybody and see, where they fall. And it doesn't take long, but,
What's the difference between a conventional and FHA, VA, and USDA?
Well, the last three are government loans. Conventional is, there's two main sources, Fannie Mae and Freddie Mac. They're the ones that say, here's all the money, and we just have to follow those guidelines. So FHA is Federal Housing Administration. They have a lot of good programs. They have rehab loans that they can do, a little bit more involved, as you know. And USDA's Department of Agriculture. Those are pretty cool. It depends on where the house is. You can go on their website, plug in an address, and it'll tell you if it's eligible. And that can be 100% financing. And you can get what's called seller assist. That's another way of getting money. The seller is allowed to give you a certain percentage depending on the loan program. So,
what is the percentage down that you have to have on a conventional, FHA, VA, and USDA?
if you're a first-time home buyer, conventional is 3%. FHA is 3.5% regardless. USDA can be as low as 0 if you qualify, and VA can be 0 also.
Okay. And VA, who can actually get the VA?
It's any veteran, as long as you have a DD 214 and a certificate of eligibility. And
Right.
then it tells
Would
us what
that-
they're
would,
able to do.
Would the Coast Guard fall underneath that?
Sure.
Excellent. And everything. And what are the credit requirements?
Well, that kind of just changed. Fannie Mae got away from the traditional scores. They look at the file overall. So usually it used to be 620 and above. Now we've seen people get approved with under 600, under 500 if the conditions are right. Very large down payments, as long as they had previous mortgage history that they paid everything. And even if they didn't, as long as the file is less risky. So more money down, they look at it from that point of view. Because credit scores don't always tell the story of a person, it's just circumstances sometimes. But with FHA, you can do the normal scores, or 580 and above. You can go down as low as 500, but it's more money out of pocket. So, and in credit scores will determine where your interest rates fall, and it depends on the loan program. The cool thing, everybody hears mortgage insurance. They don't. They think it's, you've heard various things what they think it is, but it protects the lender, so you don't have to have 20% down. But FHA has a flat rate. If you have 3.5% down, it's one amount. If they're 5% down, it's another amount. Conventional, it's based on the down payments and your score, which dictates how much it is. So.
Okay. Let's go over and discuss, like, without naming names and everything like that. What was maybe your hardest loan that you had to do? Oh my gosh, there's so many.
Well, a lot of people will see their credit scores through various outlets that aren't the same as what you see on a regular credit report, because it's two different models. So showing people their scores and then trying to help them get their scores up. There's companies that I've had them reach out to that have worked pretty well, because I vetted them first. I got them from other mortgage advisors because I want proof before I tell somebody to go somewhere and spend a little bit of money. But probably the ones that have the credit issues and things that might happen as they go on. Some things pop up that they weren't aware of. So those are probably the ones that are the toughest, where if something changes you weren't aware of. Now what do you do? But it's neat with Weichert because they have so many companies involved. When they started the company, it was just real estate. And then Jim Weichert built up the company with all these other companies to support the real estate side. So you have the mortgage, you have title, you have the insurance agencies, relocation. There's so many, and it's all designed to make it easier for the people. And you don't know how easy it is until you are outside the box with various other companies, different insurance, different title, different mortgage, and now there's no sense of urgency, I guess you could say. But with Weichert, it's I can pick up the phone right this minute and talk to top people in all the divisions, and they help you with that. It's awesome. I love that part of it. Yeah.
Great. But you still didn't give us a story of what was your toughest.
That's a good question. I don't know as far as the toughest. Give me an example of what you tough. I'm trying to.
Well, okay, let's say maybe it wasn't your client, but somebody who was not able to get a loan through the outlet that they were first dealing with, and then they came to you and you were able to pull it off.
That's a good question.
Or if you had something where it was some sort of difficulty issue that happened in the midst of the transaction that you were able to clear up and get it to closing.
That's a good question.
No, I got good questions.
It's like the deer in the headlights. You're on the spot. I'm trying to think of what would be something that was,
or something that was a little bit interesting, like somebody was buying something that was kind of a little different.
Yeah, I had somebody buy a car during the process, and that was a pretty big payment that came out of nowhere. So, but they didn't have a car, so they were moving from New York City, and they came here. Next thing you know, when at the very end they do a soft pull to make sure that everything is normal. Here's this inquiry, and we're like, well, what was this? Oh yeah, I bought a Tesla. Like, a what? And you know how much those are.
And those are not
so
cheap.
Yeah, that it didn't.
Especially when you have to get all the components so you could charge it.
I skipped the beat. I was like, just kick in, but
they made enough that
it worked out.
It didn't phase the
most expensive one, did you? Like, no. I'm like, oh man, it's surprises like that. You try to tell people,
right?
And
don't buy anything like furniture. Don't buy appliances. Right. Don't buy a car on credit. Pay cash. You could pay cash all day long.
Yeah.
Just as long as it's not interfering with cash that you have to give at closing.
Yeah.
Sellers, you're off the hook. You can do whatever you want.
Right. I know.
But if you're buying, don't put anything on credit. Put it on credit the day after you close. So once you're closed, go and buy the refrigerator, go buy the furniture, go buy your car, go on vacation. Just don't do it during the transaction.
Right.
Do not put anything on the credit cards because it'll cause your debt to ratio to kind of.
Yeah, you can.
Kind of go out of whack.
Don't quit your job and get a new job.
I had a situation, and
now you're making me think that happened.
I had a situation where somebody, they were putting in an offer.
Mm-hmm.
The attorney on the other side, because this was happening in New Jersey, the agent on the other side knew this, and the mortgage lender knew this. So 3 people knew this besides the buyer, that he was not working. They were trying to get his boss to say he was working, even though because it was off season. And we had to literally wait 3 months.
Wow. Because
they asked for extension, and we didn't know until I really started kind of like, what's going on? Like, this should have closed. Like, this guy was making enough money. Like, what is going on? Finally, they had confessed, and we still had to wait the extra 2 weeks once we finally got that out of them because they were just avoiding.
Oh, wow.
And the guy was not working, and he did not get the house.
Yeah. Well, and you know what? That brings me back to a story because you and I ran into this where there were a few times where pre-approvals were given to people that didn't have anything on the paperwork other than go look at these houses in this range. Okay, well, it doesn't say anything else. And we have what's called a second look program where we get a cost sheet or a pre-approval from somebody else. We run all of their information and just see, if it's actually correct. And both times, what did we find out?
Or if you can get them more money, get them more,
be pre-approved. You know what?
For a higher amount.
That did happen recently. Back in December, I looked at, there was a second look program that we do. And both clients were able to go conventional instead of FHA, and we were able to raise the buying power, and it was awesome. So
that is awesome.
Yeah, it was pretty exciting. It's fun to
don't they get a?
Oh yeah. If you have to do a second look, Weichert offers a $200 gift card, but we have to have a pre-approval and a cost sheet we run all the information, and there are times I've saved people $2,000 or $3,000.
And when is that program going to end, or is that
It's through June, but I have a feeling they'll extend it. It works really well. I mean, it's
so June of 2026?
Yep. Yep.
No,
We'll do it every
for
6
everybody,
months,
for everybody out there,
Yep.
just so you know.
Yeah. It's pretty
So
cool.
don't be afraid to ask.
Yeah, we do the soft credit pull, so it doesn't affect anything, and it's not about it actually helps the agents because I'm primarily the person that helps all the agents in the office to let them know, is this person actually able to buy? If they use me, that'd be great. It's fantastic.
Right.
But
yeah, we've
if
run
they
into
don't-
a couple where they couldn't buy.
No,
They were,
but they were under the impression you were, and you drove around with people, and if anything, it vets people for real.
Yeah.
Because if it'll work, I'll let you know. If it can't, well, then here's the proof. It's not just so.
I ran into a situation. I'm not going to say the company that it was, but it's a well-known one, online source one,
Mhm.
and they had approved my clients. They were buying a mobile manufactured home, but it wasn't in a park or anything like that. It actually was on land, so somebody had it put on the property that they bought, and my clients bought it. And all of a sudden, they were asking for them to put more money down, to do this, to do that, because the fact that they didn't follow up to make sure they did all their P's and Q's in the beginning to let my clients know that the rate had to go up because it was a manufactured home. And so they tried to pull it in at the end, and then they tried pointing fingers at everybody, including my client, including me.
Mhm.
And I'm like, I'm not the mortgage person. Like, that's on you. Like, why would I have anything to do with that? It's not like you didn't get the piece of paper that showed that it was a manufactured home. It's not like you didn't see the pictures. Not like you didn't get a description of it or anything like that. You saw the pictures and everything. And I was just like, really?
Yeah.
Oh, my client was so upset and everything like that. And they did refund some of the money that they forced her to pay at closing, but they should have done all of it. But my clients are happy. That was a moot point, but at the end of the day, they got the home that they wanted. They're fixing it up and love the house. So that's where we're at. And
That's good. I guess one of the ways once you have a credit report, you can put in as much income as you want. You can put in as much money as you want. You can make a client be pre-approved. Doesn't mean it's accurate. But you can do it.
Right.
But that's
you need to have the cold hard facts.
Yeah.
If you don't have the cold hard facts, then you going out there and looking at homes where you have no idea if you can actually afford it is a moot point.
Right.
Because at the end of the day, you're going to just be upset. You're going to upset the agent that's been helping you, and you're going to upset everybody.
Right.
And then, who are you going to go back onto? If none of the facts have been checked.
Sure. I mean, things happen when they're supposed to.
Yep.
At least if you know what's going on, come in and find out what you're actually able to do based on your information.
Right.
It's your math.
Just so you know, it's not based on what you're paying in rent.
No, rents, yes.
If you're paying $2,500 in rent, does not transfer to what a mortgage payment would be, to what you think you can actually afford. You're just able to make this work. There's a lot more nuances that come with getting a mortgage, because you've got homeowners insurance, you've got taxes, you've got a lot of things that get added into it. So that mortgage payment, does not match up with your rent.
And that happens online. You'll see houses that are shown, you can get this house for this, for this payment, but what are they missing anything?
Right.
So when I do my calculations, I look at everything, and I overestimate a little bit. So
and FYI, especially in Pennsylvania, a lot of houses, a lot of properties, you have an HOA that you're paying for.
Yeah.
So that also adds to the cost of the mortgage.
And speaking of that, when you have condos, they're not all of them are all pre-approved through the various agencies, Fannie Mae, FHA. You have to know ahead of time. So sometimes the agents, when they list the houses, they're, a lot of them go through with cash. There's no issue. But there's condo questionnaires that have to be filled out. There's a lot more, more to it. So.
If you're an FHA buyer, you need to know if you're buying a condo or a townhouse or something of that nature, where there's a condominium type thing going on there. You need to know if they are qualified to allow you to have an FHA. Not all of them are approved for that. They have to actually get approved to be an FHA. Doesn't mean that, if you're buying this, you may have to be paying extra and everything like that to force the hand for the condominium to become FHA if you really are determined to buy in there. But you will be paying a little bit extra cost because you're going to be the one that's going to be bearing the cost of paying for that. Because there is a cost for the condominiums to pay to be FHA approved.
Yeah. So the process isn't hard. It
No.
seems scary. It's not. It's
No.
only a few things. So you look at the credit.
Communication.
Yeah. You look at the credit. You look at the income. You look at the source of funds, and then you start to figure out what price house should I look at. Because if people say I have a certain amount down, well, is that down plus closing costs or including? So you have to find out what that is. I just had a client today. Same thing. It's like I want to put X amount down. I said, total out of pocket. If so, then part of it is down payment, part of it is closing, and then you have to take into account all the money you're going to need. And I'm always right there. I'm within $500 almost every time.
Right.
So,
Right.
Because I've done it so many times. I mean, with Weichert alone, well over 500 closings. So it's just Weichert. But yeah, it's a lot of fun. It's a blast trying to figure things out and get people to they buy houses. We had a couple where they didn't even know what they could do, and they were going to rent. Agent brought them in. We sat down. I looked at their credit. I had them do a few things. You can refinance cars if you owe a little bit, but your payment is still high. So there's various things you can do. So when I look at everything, it give you an idea of what you can do without spending any money. That's my favorite thing, is not spending money to accomplish what I want to do. And they went from like a 175 pre-approval to 250 and closed like 2 weeks ago. So.
Oh, is there a little bit different process if you're just buying land?
That is, yes. Land is, now a lot of banks do that. There aren't a lot of mortgage companies that do it. And typically they look for 20% down when they do like balloon loans. They're interest only 5 years, 7 years. But then you would need a construction loan after that. And
Right.
a lot of banks, there used to be a lot of people do it, but there's a few, that are specialized in it. And it's, buying the land, you have to make sure that it works for a house,
Right,
As
that
long as there's
land perks and
right,
everything, and that,
can you-
are
the
you
septic
putting in a
well?
septic in, or are you doing sewer?
Is it, you have to find out all the costs.
Right, is there any wetlands on the property?
Sure.
Yeah, there's a lot to it when you're just buying straight land.
Mhm.
What about our thoughts on commercial properties?
Well, we don't do a ton of commercial, but that's a totally different thing, because that's not regulated by the same guidelines that.
Right, it's a totally different animal.
Yeah, because if you're buying a house, you're owner occupied, are totally different than commercial. And those are basically big banks also.
How about if you're buying like a multifamily home?
You can do up to 4 units. That's still, you can live in one and rent out the other 3. You can buy, we also have loans that are called DSCR, debt service loans. Those are pretty popular, where you're not going by your income. You have to be a homeowner. You have to have a good mortgage history, and you put down 15, 20, 25, 30%, and the income is based on what the rent is compared to what the mortgage payment is. So if the rent and the mortgage payment come out to be the same, then that's what it's called a 1-to-1 ratio. Rates are a little bit higher, but that's it. That's all there is to it. And I've done a few, and they're very simple. As long as the math works, it's always about the math.
Okay, so what if you're buying a multi-unit, like say like you're buying a duplex or a 3-unit, and you're going to be living in it? Is there any way of doing that? On the low end, because you're going to be living there, or is it a high end?
It's still the same. It's still the same guidelines. If you're living in it, as long as they'll give you credit for the income. See, when an appraiser goes out and looks at the property, they're going to give you the value of the property plus what the other units would pull in and rent, and the lenders will give you some credit towards the payment that you're going to have. So as long as you're living in it.
So they'll probably ask, like, before they go out there and give you the price, like which unit you plan on living in. Smarter way of going about that is that you live in the smaller unit, the 1-bedroom or the no bedroom unit, and rent out the other ones, because they're obviously going to bring in more money.
Sure.
If you're doing it that way. So then that way, at least, you know, how much more money you're going to need to bring in, and cover like what you need to have for the down payment and
There's so
everything.
many things out there. I think a lot of people just need to know, where do they stand financially? What can they do? Can they do it now? Can they do it later? I've had people buy a house the next day after I pre-approved them, and I've had people go years. So
Yep.
it just depends.
Yep, I
And
had
that's
a
okay.
5-year plan.
Yeah.
But we
That's
did close, and I'm very happy.
It's whatever, whenever
With them.
they're ready, whatever's best for them, I would show them, here's what you can do. What do you want to do? And it gives them ideas. We get homeowners insurance quotes for them through our insurance company. We'll find out if they're in the flood zone, if so, how much that is. So I like to find out things ahead of time to give them an idea of what they're
Right.
faced with, so you're not just going into a house and like,
Especially
oh
if
boy.
you're buying something that maybe you're buying like those houses that have to be fixed up,
Mhm.
that are like either HUD houses or anything. Those are always fun.
Yeah, they can be. So,
Or
but
they're just really gross. I don't know.
yeah, that's
I've come across some houses that I was like, you're welcome to go inside. I'm going to just wait out here because I can't. I just can't.
That's crazy. So,
Yeah,
but no, it's a fun business.
it is a fun business.
Yeah.
Well, I'm so glad that you came on
Hey,
the
thanks, I
podcast.
appreciate it.
And
I never
I'm
did one
grateful.
before. It's my first one.
Well, good. Okay. So now you have it.
Yeah.
So
Hey, Joe
thank you.
Rogan. Yeah.
So thank you so much for joining me today, Bill. Please give your, who you are, what you do, and your contact information.
Sure.
Again, to
Yep.
say goodbye.
All right. Bill Nixon, Weichert Financial Services, cell phone 610-509-4612. And my email is wnixon, Nixon, at weichertfinancial.com. And I think if you Google me, I'm out there somewhere.
Oh, okay.
Yeah.
Just so you know, the 2 offices that you might find him at, but that doesn't mean that it's just those offices, is that you could find him in the Allentown office, or you can find him in the Easton office. He's been in the Bethlehem office, and he could go to New Jersey. It's not much of a stretch for him to end up in the Easton, in the Phillipsburg office, or Clinton office, or Flemington, wherever you need him to go, he'll be there.
Licensed in PA, New Jersey, and but dedicated downtown and Easton. But I can meet people anywhere at any of our offices.
And it doesn't even have to be in the office. It could be Starbucks.
Right.
Any place that there's at least a table and you could sit there and talk it out.
Yep.
But it's preferred to be in the office, so you have that privacy, so you're not having everybody else hear what your conversations are. But thank you so much for joining me today.
Sure.
It's been an
pleasure.
absolute pleasure, and this has been fun. It's good to see you lighten up a little bit.
Yeah, right.
So thank you so much. Again, my name is Dani Haines-Edwards with Weichert in the Easton office. Again, I'm licensed in New Jersey and Pennsylvania. And my contact information is 908-202-1174. And my email is dhaines@weichert.com. If you have any questions, or you want to send any comments in, or if you have any ideas that you want me to do a video on, just email profileofarealestateagent@gmail.com. Okay? Thank you so much, and have a lovely day. Bye, all.
See ya.
See ya.